Hello, Stephen Cruz here on Monday, October 17th. Really happy to be here and to answer any questions that you may have. Today is the official day for the beginning of the new rules according to the finance minister and the government's changes. And so if you are looking to purchase a house now with less than 20% down, then you will need to qualify under the new rules. And for mortgages that are conventional mortgages, that is, you have 20% down or more, the government announced or clarified some statements they've made to some of the lenders to for them regarding those new rules. And so with 20% down or more, the government did not stipulate whether or not lenders had to use the new rules or the old rules. However, many lenders, many non-institutional bank lenders get their mortgages insured through portfolio insurance. And the portfolio insurance is for all mortgages, including high ratio and conventional mortgages, so less than 20% down and more than 20% down. And so many of these smaller lenders will get portfolio insurance, and the rules apply to portfolio insurance as well. So basically what that means is that if you're looking to purchase a house with 20% down or more, your options for getting qualified with the more lenient rules are smaller than your options for getting qualified with the more strict rules. So it could change the rates available in the marketplace potentially. And the government clarified today that they wouldn't institute those new changes for portfolio insurance until the end of November. So some of those lenders have some time to figure things out before that comes into place. There were a few lenders who had announced late last week that all of the mortgages moving forward that they fund will be qualified under the new rules. And I haven't seen any of them take that back per se, but not every lender also talked about that. So it's been a fantastic bunch of changes over the last couple of weeks, and people have been out buying homes quickly so that they qualify under the new rules. And one of the clarifications that was made, I don't think I talked about it last week, but one of the clarifications was that if you write and offer a purchase agreement prior to today's date and have it finalized, so that is your purchase agreement is finalized, then you can still qualify under the old rules. Another qualification was if you were pre-approved by a bank or a lending company, then and under the old rules, then they will honor that moving forward. So you could potentially still qualify. So there are some things there. Today, I didn't get any specific questions but anything else other than these new rule changes. But what I wanted to do today is just mention some differences. So I had a client ask me today about a potential purchase he was looking at, and he was wondering how this might impact him. So this client is looking to purchase a house for about $500,000 with 20% down, so that's $100,000 down. And so at today's interest rates, his mortgage payment would be $1,780 approximately per month. And the interest rate that he needs to, or the payment that he needs to qualify at, if under the new rules, would be $2,250 approximately. And so that's a difference of about $700, something like that. He doesn't, or sorry, $500. So he doesn't have to qualify under those numbers yet, but that's just so that he so that you understand, he and you understand how that works. So on a $400,000 mortgage, the qualifying payment is approximately $500 more than the payment you would be making under today's interest rates. So that's just a clarification in case you wanted to know. I'll also do that under a different purchase price as well. So $350,000 purchase, so more of a first-time home buyer purchase, potentially with 20% down. The interest payment is about $1,245 per month, and the qualifying payment is 1,571. So that's a difference of 250, something like that, 325. So on a purchase price of $350,000, the payment difference, qualification payment difference, is about $326. So that's really all I have today. I don't have any other questions related to the rules. I've had people ask about the rules and how they may affect them, and at the moment it's really hard to say how the interest rates will be affected. One factor could be that there's less competition. A lot of the other lenders, the secondary lenders like Merrick's or RMG, MCAP, First National, Street Capital, lenders like that, they compete with the big banks, TD, RBC, CIBC, Scotiabank, and they will be at a bit of a disadvantage now with the new rules because of the way the government is requiring portfolio insurance qualification. And so some of these lenders may not be able to offer the same rates. They may have to increase rates to be competitive. And so then the banks may or may not be able to do the same. So it could cause an increase in interest rates over what we see today. But it also could slow down the mortgage market, which is what they want to do in those two centers, Toronto and Vancouver. So it could do both. So it's hard to say. We really have to see what happens and how the dust settles over the next couple of months. But anytime we reduce competition, I'm not sure how that's a good thing for the marketplace. But hopefully it doesn't impact purchasers and homeowners and mortgage holders too significantly, and again, we'll see. So I'm again happy to answer any questions you have. Please visit me on Facebook and post your questions under our Google Hangout section, or send me an email or a text question, and I'm happy to answer it here or answer you directly. So again, thanks very much for checking in. You have a fantastic day, and we'll talk to you again next week. Ciao.